Buying on margin, a risky short-term strategy where a buyer borrows money from a broker to make an investment. The buyer believes the stock price will rise and is trying to maximize profits by investing more money in the stock. Call option, the right to buy a stock or commodity future at a given price before a given date. The owner of the call option is speculating that the price of the stock will go up and is therefore bullish. Candlestick, K-chart, a form of Japanese charting that has become popular in the West. A narrow line shadow shows the day's price range. A wider body marks the area between the open and the close. If the close is above the open, the body is white, not filled. If the close is below the open, the body is black, filled. Capital gain, the profit derived from the selling price exceeding its initial purchase price. A realized capital gain is an investment that has been sold at a profit. An unrealized capital gain is an investment that hasn't been sold yet, but would result in a profit if sold. Capital gain is often used to mean realized capital gain. Channel, when prices trend between two parallel trend lines, this is referred to as a channel. Channel line, a straight line drawn parallel to the basic trend line. In an uptrend, the channel line slants up to the right and is drawn above rally peaks. In a downtrend, the channel line is drawn below price troughs and slants down to the right. Prices often meet resistance at rising channel lines and support at falling channel lines. Commodities, raw materials such as gold, pork bellies, or orange juice. Traders in commodities buy and sell contracts, also called futures, for such materials. Confirmation, a subsequent signal that validates a position stance. Traders and investors sometimes look for more than one signal or require validation before acting. For example, confirmation of a trend change may entail an advance past the previous reaction high. For an indicator such as MACD, confirmation of a divergence may be a subsequent moving average crossover. Continuation pattern, a type of chart pattern that occurs in the middle of an existing trend. The previous trend resumes when the pattern is complete. Correction, after an advance, a decline that does not penetrate the low from which the advance began is known as a correction. Also referred to as a retracement, a correction usually retraces 1/3 to 2/3 of the previous advance. Correlation. Correlation measures the degree to which two securities move together. Positive correlation values indicate movement together in the same direction. Negative correlation values indicate movement in opposite directions. Correlation can be used to construct a well-diversified portfolio. Crossover. A point on a graph where two lines intersect. Depending on which lines they are, a crossover may indicate a buy or sell signal. For example, the price line crossing above a moving average line may generate a buy signal. Cup with handle. A bullish chart pattern that marks a consolidation period, followed by a breakout. The cup part of the pattern resembles a rounding bottom, which is followed by a handle that acts as a final consolidation before a breakout. Cycles. A price high or low that repeats itself at the same interval over time. Cycle theory asserts that cyclical forces, both long and short, drive price movement in the financial markets. Cyclical stocks. Shares of companies that are highly sensitive to economic performance. Cyclical stocks tend to perform well when the economy is growing and suffer when the economy contracts. Dark cloud cover. A bearish reversal pattern that continues the uptrend with a long white body. The next day opens at a new high, then closes below the midpoint of the body of the first day. Day trading. A style of trading where all positions are cleared before the end of the trading day. Death cross. A signal where the shorter moving average moves below the longer moving average. Usually this term is associated with the 50-day moving average crossing below the 200-day moving average. Declining. A market stage of a stock that is characterized by a downtrend with subsequently lower highs and lower lows. Descending triangle. A sideways price pattern between two converging trend lines, in which the upper trend line is descending while the lower line is flat. This is generally a bearish pattern. Distribution. The systematic selling of a security without significantly affecting the price. After an advance, a stock may start forming a top and trade sideways for an extended period. Divergence. A situation that occurs when two lines on a chart move in opposite directions vertically. People often look for divergences by comparing a stock's direction to the direction of its RSI, its MACD, or its stochastic oscillator. There are two kinds of divergences, positive and negative. Doji. A candlestick with a body so small that the open and close prices are equal. A doji occurs when the open and close for that day are the same, or very close to being the same. Double bottom breakdown. A bearish point and figure chart pattern that forms when an O column breaks below the low of the prior O column. Double bottom reversal. A bullish reversal chart pattern that is typically associated with line and bar charts. The pattern forms with two consecutive troughs that are roughly equal. a moderate peak in between, and a resistance breakout. Double top breakout, a bullish point and figure chart pattern that forms when an X column breaks above the high of the prior X column. Double top reversal, a bearish reversal chart pattern that is typically associated with line and bar charts. The pattern forms with two prominent peaks that are roughly equal, a moderate trough in between, and a support break. Dow theory, one of the oldest and most highly regarded technical theories. A Dow theory buy signal is given when the Dow Industrial and Dow Transportation averages close above a prior rally peak. A sell signal is given when both averages close below a prior reaction low. Downtrend line, a straight line drawn down and to the right, above successive rally peaks. The longer the downtrend line has been in effect, and the more times it has been tested, the more significant it becomes. A violation of the downtrend line usually signals a reversal of the downtrend. Engulfing pattern, a reversal pattern that can be bearish or bullish depending upon whether it is in an uptrend or downtrend. The first day is characterized by a small body, followed by a day whose body completely engulfs the previous day's body and closes in the opposite direction of the trend.